discounted cash flow method of valuation, in my view, is the most appropriate, precise, accurate, dependable, reliable method of valuation of any asset among all the methods and the approaches that are available to us as valuation professional. Only two precautions need to be taken in this respect. And what those precautions are? Those precautions are: number one, for the discounted cash flow method, you will need to project the future cash flows. You have to take all cares to ensure that the cash flow projections that you are doing or which are coming to you from the side of the client, those cash flow projections got to be as realistic, as accurate as possible. And that's number one. And number two, you need to ensure that the cost of capital that you arrive at for the purpose of discounting these future cash flows again must be as precise, as accurate, as realistic as possible. And remember, this cost of capital should factor in all the risks and the return of your client so as to be the realistic indicator of the cost of capital. If you take both these precautions, number one, you have arrived at the cash flow projections which are absolutely realistic. Number two, you have arrived at the cost of capital which is as precise and as accurate it can be. Now, when you arrive at the cash as the value of the business based on the discounted cash flow method, you can be rest assured that the valuation that you would arrive are as realistic as they can be. So this is what is about two precautions that you need to take while using the discounted cash flow method.